We wrap up the week with a brand new chart. Gary Wagner joins us next. Gary, thanks for being back with us. We hope you weren't affected by the storms in Hawaii.
The storms didn't affect anyone but the Big Island, and it's great to be here with all of you today.
Great, Gary. Now, last time you were on, we were speaking about whether gold could keep its current pace and whether an uptrend was forming. What have you seen this week?
Well, when we look at the market overall, the last time we were on was about 2 weeks ago, and it hit that low at 1280. And 1280 was exactly a 61% retracement of the prior rally that moved gold up about $100 off of the lows at 1240. We're seeing very, very good support that came into the market, and we're currently looking at support between 13 and 1305.
Gary, another news that I'd like to talk about with you now is a global gold demand down 16%. This according to the recent study by the World Gold Council. They also found that in the second quarter, Chinese demand fell 51% and Indian demand fell 39%. Gary, what do you make of these numbers?
Well, they're interesting numbers. I don't think it's the full picture, but according to the council, demand is down. But they also reported that about 23%, I believe, of the gold that is being purchased in India, for example, is black market. So we don't really have the real numbers as to what's going on in terms of the purchases in India. And the other two large producers, of course, are China and Russia. And my sense is they could be mining and not so much hoarding, but moving it into their stockpile. So I'm not convinced we're getting the whole picture, but there is absolutely no doubt demand is down.
All right, Gary, let's get to the segment that you've brought to us this week.
Well, what I'm going to present to the viewers of Chart This is a continuation of what we started 2 weeks ago. We looked at the possibility of a potential bottom in the market. And in fact, now that we look back, that was the bottom. So now what I want to do is to use these same techniques that we create our models with and give you my most current forecast to where I think gold prices could end up at.
All right, let's get to it.
All right. On today's insert of Chart This, I want to pick up where we left off on our last Chart This. That was at the beginning of August. Put that into perspective in terms of both my macro view as well as my current interim or short-term forecast. If you recall from our last show, we were looking at the market which had been in a defined downtrend, actually coming off of a high of about 1345 to where it actually hit a bottom at about 1280. And we recorded on Thursday, that's this day, Friday, the following day, you can see this tremendous spike up in the market. And I was looking for the potential for a bottom for a couple of reasons. Primarily, when we take a look at the most recent rally that occurred just prior to that began in June. It's a $100 rally. And then we look at the actual retracement. It came to a 61% retracement. And that certainly fit into our current model of forecasting. I absolutely believe that gold could move back into a major rally. And to do that, I want to take a look at a large macro view of the market. This, of course, is a monthly chart. You can see the impulse wave, which takes us roughly from 400 to above 1900, and then a double bottom that occurred precisely at a 50% retracement. And my sense is that we now could be moving back into another major impulse phase. Now, of course, that impulse phase itself is going to take quite some time to unfold when you consider that the last one occurred over a 6-year period in time. The correction that followed was almost a 3-year correction if you look at the market from when it topped out in 2011 to the beginning of 2014, where we had this double bottom, which is right here. And although it's too early to ascertain or get any technical evidence that we're now in a bull market, we have the signs that we initially look for in a market that has built a base, had a pivotal move, and is now subsequently out of the bear trend that has been so predominant. And the reason I say that is as follows. We obviously had that tremendous rally, one rally in 2013, but everything was given back. Now, once we hit this double bottom, we had a sizable $200 rally that started beginning of last year and took us through the first couple of months of 2014. And then from there, we had the market correct, and it corrected, when you look at the numbers itself, just at about 76%. It was more than a 61% retracement. It was deep. But from there, we had this $100 rally, and then we had a 61% retracement. So that the first signs that we're actually getting that this could be something that is a little different is the fact that if we look at our last 3 real lows in the market, we have had a series of higher lows. To complete this, or to give us the technical evidence that would confirm it, we need to now see a series of higher highs, of which we haven't gotten yet. However, these are the first signs that we do look for as a market moves from a bear market to a bull market. So with that in mind, in terms of a historical perspective, the following is what I'm looking at in terms of my current forecast in the market. It is my sense that we began any kind of a bull run, that would have to be at the second of these double bottoms. We had the first wave, and then we had an intermediate second wave. My current belief is that we're now in a intermediate third wave, of which we have seen wave 1, wave 2, and this is 3 of 3. In other words, an intermediate 3 out of 3. Now, for this model to hold weight, a couple of things have to happen. The first thing is that wave 3 has got to terminate at a high that is above that of wave 1. The second thing that would have to occur in an Elliott Wave model is that wave 3 cannot be the shortest of any of the impulse waves, so that even if wave 3 were equal to wave 1, which was a $100 move, we would actually see this market move to about 1380. Now realize that this wave here is going to once again be subdivided into a 5 count, so I'm not looking for the market to go straight up, and I'm also looking for the potential of the occurrence of the market moving up to about 1380 to happen over the next 6 to 8 weeks. But this is my current model using Elliott Wave, Fibonacci, and candlesticks.
Gary, thanks so much for your thoughts, and thanks for bringing us that today.
All right. I want to wish all of our Chart This viewers a great weekend and prosperous investing next week. We'll talk to you real soon. Bye-bye.
Fantastic, Gary. Thanks so much. We'll see you next week. And thanks for watching Chart This. We wish all of you a very happy weekend. Thanks for watching.